So, how do you prepare for a recession today? There's real truth to that idea that you can never predict a crisis, but there are signs that show you that perhaps that bull cycle has run for far too long. There are multiple ways to prepare for a recession, ranging from simple, such as holding cash, to more advanced ways and riskier, such as short selling. We will describe the pros and cons of the main alternatives, okay? So the number one is cash reserves. Warren Buffett is now holding more than half of his holdings in pure cash in the hope of a market downturn, whereas he would be able to scoop magnificent returns by buying supremely cheap as he did in 2008. The advantage is that it is easy to do and offers tremendous liquidity for you to buy other assets at any time. The downside of holding cash is that if the market keeps climbing up, you have missed a substantial. The price you pay for cash reserves is simply the national interest rate that you would otherwise have received by placing in a long term government bond, i.e., 20 years treasury. In an environment that is at zero interest rate, that means that a 30-year government bond is returning to you just over 1%, which is not a great place to be in the long term. However, it may make sense if you're holding for very short periods of time in the hope that the stock market crashes and you take advantage of it. It's something very hard to do, but it can be done. That being said, it's important to remember what Peter Lynch says. He actually advises against holding cash. He says that far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in the corrections themselves, which is very interesting, right? However, there are certain aspects that you may take into consideration when holding cash. For instance, how long has the bull market been for? What's the PA show of that market, the price per earnings of that market? What seems to be the prospects for the near future in terms of interest rates, in terms of the economy? What are you seeing that indicates to you that maybe the market is about to run out of steam? You never time precisely right, but there are things that you can adjust, and that's what this video is about. Number two, gold and other commodities. This is my personal favorite, the reason being by its historical strength on being a store of hold of wealth and currency reserve. Gold is a great inflation hedge asset, meaning that the more inflation there is, the more gold should appreciate in value. A recession marked by inflation or by enormous premiums of cash, as it is now in the middle of COVID-19, will invariably inflate gold prices. See, for instance, in this chart how gold compares against currencies since 1850. By studying history, you're able to understand the history cycles and therefore take decisions that may impact the future. So, as shown from 1850 until 1971, gold returned through its appreciation an amount that equaled the amount of money lost to inflation, with the exception of Germany, though there were big variations around that average, such as those previously described, until the 1930s currency devaluations and the end of World War II devaluations of money that were part of the formation of the Bretton Woods monetary system in 1944. Gold stayed a steady price while money and credit expanded until 1971. Then in 1971, currencies were devalued and delinked from gold, so there was a shift from a type 2 monetary system, those backed by gold, to a fiat monetary system. That delinking of currencies from gold and going to a fiat monetary system gave central banks the unconstrained ability to create money and credit. In turn, That led to high inflation and low interest rates that led to the big appreciation in the real gold price until 1980 and 81 when interest rates were raised significantly above the inflation rate, which led currencies to strengthen and gold to fall until 2000. These also tend to be ways to prepare to inflation, such as silver, platinum, diamonds, jewelry, fine art. If buying gold, it's better to get physical gold rather than contracts, just because contracts are usually leveraged on the physical gold that they represent. A very recent alternative to gold that has picked up a lot of steam are cryptocurrencies. The main ones are Bitcoin, Ethereum, now strong presence again from Solana and Cardano, and they represent basically think about Bitcoin as digital gold, a lot easier to circulate than physical gold, and Ethereum as a digital oil. So you pay with Ethereum to do things in the digital world, such as buying, transferring, and negotiating non-fungible tokens (NFTs). Third, short selling. Selling is pretty advanced, so if you're new to the market, you should actually stay away from it. So short selling occurs when an investor borrows a security and sells it on the open market, planning to buy it back later for less money. Short sellers bet on and profit from a drop in a security's price. The problem with short selling is that it has a high risk reward ratio. Even though you can profit massively, it has no limit to how much you can lose.
Short interest in GameStop.
This GameStop situation is the craziest I think I've ever seen.
Effectively, you're betting against the market. The market has the long term tendency of going up as assets get more valuable over time and overperform inflation, exposing you to unlimited losses. However, there's always a limit to how much they can go down, limiting your profits when short selling. So, for short selling to be effective, you need to be right almost immediately, which rarely happens. Even Michael Burry in the Big Short movie didn't actually short sell, but rather use put options credit swaps that will be explained in the next point. Number 4, put options. Used by most hedge funds in order to hedge their positions, long and call puts are common practice amongst advanced investors. In 2020, Ray Dalio from Bridgewater Associates used against the European market in March and benefited profitably. Bill Ackman also used against C19 environment and also benefited profitably. Michael Burry during the '08 crisis, as I've mentioned before, and Warren Buffett, yes, Warren Buffett too, since 2006. A put option gives you the right to sell a stock through the expiration date at a given price. If you pick a strike price above the current price, you're buying a put option that is in the money. The opposite would be considered an out of money option. You like the long term output of a holding, but want to protect against a pending drop. Diversification. Lastly, keep in mind that diversification is the best way that we know on how to prepare for a recession. Never keep all your eggs in one basket and try to spread investments across several markets. For example, most experts advise us not to place more than 5% of our funds in commodities unless we have a specific strategy, and prefer stocks shouldn't make up a majority of one's portfolio. A good rule of thumb is to have up to 15 to 20 uncorrelated bets across different markets, different assets that are the least correlated as possible. I'll place a table here on the maximum correlation that were identified since 2000 in a given year, so you guys can have a look. The closer it is to one correlation, more assets are intrinsically linked. The closer they are to zero, the more they don't have a correlation, but there is also negative correlation, meaning that they go in the inverse position. Number bonus. Actually, let's have a bonus, right? So, whenever you are in a market that has just been through the recession and there's a lot of room to grow, you can use tools such as, you know, leverage, buying internet stocks, buying what's considered risky stocks, buying um, things that can speculate a lot. Whenever you're preparing for a recession, you cut back on your leverage, you increase your cash holdings, you go into more fundamental stocks, you go from emerging markets to developing markets, you hold the stronger currencies. Those are all ways that you can use to prepare yourself for recession. I hope this was helpful. Let me know in the comments what you're doing.